Happy Friday, everybody. Welcome to the second stream of this week. More regular stream this week. Got to take that off. So Wednesday this week, did a live stream, a bull stream about Monero. And so that's happened. And of course, I would have called, I didn't call it the high, but when I would decide to make a stream about it, that was the high for now. So definitely going to revisit Monero, what I think is going to happen, what I'm doing with it. Also got to talk about the main focus is going to be looking at Bitcoin, just because this week we finally got a little bit of price action to the upside that is following along a pattern in Ichimoku that I want to talk about and teach about, because I think it's extremely useful in determining price and time elements across any and all tickers that may trade. So definitely gonna look at that. And a few other interesting things that I want to bring up about Polymarket. I don't use Polymarket, but I saw something very interesting that I want to explore, using Polymarket to hedge pretty much any economic event, like hedging against other tradable instruments. And yeah, those are going to be the two high points. And of course, any symbols that you guys have to look at. So we'll get into that. So we'll listen to a little bit of music, copyright free, and then we'll get into it in just a moment. So see you in a bit. All right. Welcome back. Welcome back. Happy Friday. Hope everybody had a good week. It's been somewhat an interesting week. Always an interesting week. A lot of uncertainty. People worrying about the economy. People worrying about if the dollar's going to fail. All that good stuff that they always worry about. And I try to tell people the same thing. Most of the time, things are going to be okay. And we'll talk about the broader market here in a bit, what's going on. We'll check on the SP 500. Of course, like I said in the intro, Definitely going to be talking about Bitcoin because there's been a lot of talk on, I think CT, it stands for crypto Twitter. It's abbreviated a lot. And a lot of the things they notice, or people are starting to notice, is the similarity between the top of the last bull cycle, which was back in 2021, and the top, the most recent top that we had. As always, if you guys have any symbols to look at, put them in chat. Love to go through and generate ideas. A lot of good ideas come from this live stream over the years that I've been doing this. And so that's one of the reasons I do it is to teach what I think is actually useful, independent of all of the FUD and BS. I'm here to make money. I'm not here to for really any other reason that we're in trading. I mean, I love it. I would probably do it as a game, but yeah, just here to make money. Not here to argue about politics or anything like that. But sometimes politics does get, and because you may not care about politics, but politics cares about you, and politics definitely care about the market. Nothing's really come of the J-Pow indictment that they've talked about. It's hard to say if that's been bullish or bearish on the market. I think the market pretty much doesn't care. So the lack of reaction tells you that it's not really factoring that in as a major event that we need to consider. So again, we don't need to care about politics. But what we do need to care about, or what a lot of people care about, is where is price going? That's the main thing, right? That's the main thing we care about. What's up, Jeremiah? Happy Friday. Let's see. We'll take a look at those AMN and CBRL here in the second half, like you usually do. Let me get into my flow and let's talk. So I want to talk about the Ichimoku patterns, specifically the cloud. When the cloud moves, it's going to be really cool to see it. Like anything with indicators and trading, nothing is 100%. I'm a big will see Chad. I think one of the key things you have to internalize about trading is you essentially have a 50-50 shot of anything you do. And that's talking about broad things. In other words, is this asset, is this crypto, is this stock, is this futures contract going to work or not? Well, it is or it isn't. You're going to be in, stay, it's going to go up, or it's going to go down. It's really only two options. And what matters is where you put your stop, when you size your risk, and then when you get out. And those are the two things that you can control. You can't control the market itself. But a lot of people get caught in this mindset of like, well, they need to predict the future, or they know what the future is going to happen. And that's one of the major pitfalls. But what we can do to kind of cut through that and give ourselves an edge is to look for patterns. And by the way, if you don't follow him already, one of my favorite people, actually the only trader that I follow on Twitter is Peter Brandt. He's one of the market wizards that from the Jack Schwager books and stuff like that. But I follow him, and he constantly is posting interesting stuff. He uses a completely different method than I do. He relies on things like chart patterns, which I enjoy looking at and understanding. I think one of the ones that he can go back and he can toot his horn about is the fact that he identified before the silver run happened that there was a cup and handle. Again, something I don't use, but he also is very up to date on things. He was also another person that acknowledged and called the potential of Monero as well. So he's deep in the crypto market as well. And he's constantly, talking about how he banters back and forth with Bitcoin folks, because how dare you say anything that Bitcoin's not going to the moon to blaspheme the one true coin, hallowed be its name, of immaculate conception, praise be. That will get you flamed relentlessly on Twitter. But I like his objective approach, and I can already see he feels the same way I do about the Bitcoin maxis that flame him. But let's look objectively at things. So one of the things that I see as a common thing on crypto Twitter is the recognition that Bitcoin is having a thematic repeat of the top of the 2021 cycle. What do I mean by this? Well, let's see if we can, let's take out the charts and let's just look at a line. And let's go back and we'll look at the last cycle. Okay. The last cycle was, characterized by a big, long time period of malaise. And then it really somewhat, well, we'll say it began in earnest at the low of the COVID drop, the COVID crash. One thing to note about the COVID crash is while the stock market crashed over the course of a few weeks, 30 something percent roundabout, Bitcoin in this crash went down almost, I think about 60% from its February highs in 2020. Yeah. I think from the high in 20, if I recall correctly, it was Lion's going to just do closing price, but from the high of February to the low of March was almost 60%. So almost double what stocks went down. There's been a lot. I talked a lot about on this live stream about the correlation between stocks and Bitcoin. It's still very, very high. It's not 1-to-1, but it's still very, very high. Although this week, interestingly, I noticed that, and I think today is a broadly down day for everything. They're about equal, but there was a day this week where the FANGs, the tech companies, were not performing too well, and Bitcoin was actually up. That's just recent little semi-interesting. It's only interesting because of how uninteresting crypto has been for the last few weeks. A little pop that we had midweek. But yeah, I noticed that divergence, which is kind of interesting to me. What's up, Outshine? And so when we start to look at the price action from the last cycle, let's see if I can draw it here. People have started to notice that you had the big run up, followed by a low, followed by a new, slightly better all-time high, which fell off. And then one of the key things is this little last leg up, a little bit of a sucker's rally or a bull trap, whatever you want to call it, that topped out there in March of 2022. And then, of course, you had the fall off. And so when people were starting to look at the two things side by side, they are making the connection between the run up, the first all-time high hit of the cycle, the second slightly higher one. Actually, they may even cite this as the second high, but the key thing is you have these two highs, both of them new all-time highs that set up, and then you had a fall off, a bearish move, and then what everyone is kind of afraid of, depending if they're long or not, is that this history, which doesn't repeat, but it rhymes, will likewise have a similar move up, little suckers rally that will top out and then confirm by continuing the bear cycle. Now, as I said, I'm a we'll see chat. I am not going to say a bet right now either way. I'm tempted, but the resistance level that it hit this week, though it did hit one, is not one that's just, it's not all there. It's not all there. I'll show you what I'm looking for, though. And by the way, the reason I'm pointing this out is because everyone's pointing it out, and I can't help but, I wouldn't say dismiss it, but not fully accept it as a thesis because literally everyone sees it. And if there's one thing the market does is defy what everyone thinks is going to happen. And so I'm being a contrarian to the contrarians of the contrarians. So I'm a contrarian to the contrarians to the bullish Bitcoin bulls, which they themselves believe are contrarian to the TradFi sense. So we've got, again, multiple levels of contrarian inception. And all you really can go on is managing your risk and finding tradable levels. So let's go back to a bar chart, candles rather. And what I'm looking for here and now in this moment of price, we have a little, like I said, this week was interesting because we had this little leg up here on Tuesday that pumped it up, which is really just interesting in the context of the last few weeks, which have been boring. But there is something that's very important that happened. And one of the two things that I use to find support and resistance levels are volume profile and 50% retracements. I don't use anything else, and I don't need to, because taken together or even individually, oftentimes they end up being a cheat code. Like seriously, they work that well. But if we go and we analyze, what I like to do when I'm doing a volume profile is I like to do a fixed range volume profile. You can do that in TradingView. It's on the left-hand side. Let me slowly go to it right here. fixed range volume profile. I use an anchored one, which anchors it to a certain point in time. But I want to grab what I call a price era, a period of time where that is significant, either significant period of consolidation or a significant trend. And the significant period of consolidation, we can go back to, let's say, October of 2024. That's where we got into this really broad range, somewhere between 65 up into the last all-time high of 126K. And you'll notice the histogram over here gives us a lot of little peaks and valleys. I focus on the peaks. There are strategies that focus on the valleys, but peaks work, and my brain has a limited amount of capacity. So the key levels that I would be looking at is, of course, this red line, which is the point of control. That's the highest point in the volume profile. And what that's telling us is it takes the volume, the amount traded, assigned to every single price, down to the penny, and it tells us like how much was traded in terms of volume at each of these levels. And so we have a couple of key peaks, and I try to focus on the most obvious peaks, the ones that are going to matter the most, because there'll be a lot sometimes, but they are extremely useful in that context. Now, what we can do is we go back in history, and even if we let's just remove this for this. Let's go back a little bit in history, because that bottom level, we can already see how influential it has been. Yeah, let's grab this. So we have this as support, and this is a unique one because I call this a last level of support, because essentially you have a much larger than normal valley that falls off. And so this level right here at 84,107 was extremely powerful. And of course, we would have known that. TradingView will let me go back in time. It'll do this little number. Maybe on the weekly, it'll show it. Yeah, they turn that off for replay. But you can see how we can draw this before it even happens if we drew it like at the all-time high moment. So in other words, at the all-time high moment back in October, like if we drew it from there, that's all that we knew. We're not redrawing anything. We still would have had that same level. And that was the level it came to and held. Pretty cool. Very cool, actually. And now but the main level, the one where the most trading happened, was at about 96,361. And Wednesday's price action punched above it. But on the weekly, what I try to use the most for really deciding if a level has been held or broken by the bar closing above or below it, that's going to be fought this weekend. That battle is right now going on. And so I was tempted to throw out a short, but I just don't think we're there. Where there is more on the upside to 103, because again, I'm incorporating my second important level, which is the 50% of this leg down we had from October. And that now we see that we have a volume profile level matching with that 50% level. That's an area that I want to look for a setup in. So that's what I'm waiting for right now. I'm waiting to see if price is going to get up to that level. And plus, that will influence the sentiment of Bitcoin social media and people's minds, because we get a little bit of move up. We recapture 100. 100 is, of course, 100,000 is a key psychological level. And so if you can get 100,000 to print again, and you can get it up there, now you're going to start seeing the tweets about, we're back, baby. And that can get that emotion that you need to have some really significant price action to the upside or the downside. But the key thing is, right now we've been sitting in a period of just laziness, malaise. Nothing's been happening. People getting bored. But you got to price is just a reflection of what people value or what the value they put on it. I mean, that's all that underpins Bitcoin. It's not inevitable that it goes up. People have to buy it. People have to choose that it is worth 100,000 per coin. Right now, everyone in the market agrees that the price of Bitcoin is 95,000 per coin. That's all you can say. That's all that's true. But if it gets up to there, now you start getting people talking about a new all-time high. And that's going to get people into some leverage longs. That's going to create a difference in the market that can facilitate what comes next. If I was short, I would want it to facilitate a big move down off of that resistance. We'll see. We'll see. So that is what I'm looking at right now. Now, let's bring up Ichimoku and let's talk about that. Take everything off, talk about it independently, and look at the weekly. Now, one of the things that I do or use Ichimoku for, it's very clear here on the weekly, is I look for price and time to be in alignment versus the cloud. So price and momentum. Momentum is the Chikou, which is the purple line here, the lagging span in Ichimoku indicator, where its price shifted backwards 26 bars, but it creates a confirmation for a breakout. A breakout will normally start when you get price above the cloud, but I don't call it bullish or bearish until you get both price and momentum on the same side of the cloud. At that point, you have a trend reversal, and then it can facilitate the full trend as it did back in December of 2023. Now, the inverse is also true. Once you get price, which will naturally bring momentum down, now you get on the bearish side, then a bear trend starts. And so where we sit right now with price in the cloud, momentum on the other side of the cloud, this is still bullish on the weekly. It's still bullish. The trend is still intact on the weekly. The bull trend has not ended on the weekly. Now on the daily is where I will tend to look for trading opportunities or be able to say, okay, this thing is bullish or bearish on the daily. But the higher time frame always rules. And so I'm looking at the weekly for when this thing actually gets bearish. The problem, though, with using the weekly for trading or taking positions is that once you get that action that confirms it, like we did on the bear cycle back in 2021, once you have price all the way here, momentum here, you've already basically given up about half the move, 50% drawdown. And there's not that much left relatively to the bottom. At least there hasn't been in past cycles. So you're basically, to wait on the weekly to confirm, you've already given up half of your potential gains. And so you got to be brave one way or another, bullish or bearish, and you got to jump the trend on a lower time frame with the setup. But you can be sure, you can be very confident if the weekly actually meets those two criteria, what kind of trend and what kind of phase of the cycle that you're in. So that is what I'm still looking at. Now, that is one way to use Ichimoku that I use for determining trend. The other, which is a little more nuanced and not nearly as reliable, not because it works less, it's just, you'll see. So you'll notice another key thing about the cloud. So a lot of times the cloud makes flats. Flat areas, and by the way, the orange line is called the Senku-B. I'm Japanese, so I'm not pronouncing it correctly, but Senku-B or so yeah. What this comes from is why I do 50% retracements. One of the things I identified, I don't use Ichimoku all the time now. I use 50% retracements because Ichimoku naturally forms these 50% retracements. And I found it just much easier and more appealing to the eyes if I just use the 50%, or I just draw them manually. And you'll see how they work quite frequently for finding supports and resistances. Go back and test it for yourself. Draw 50% retracements on Bitcoin, draw them on anything else. A lot of the people, if you're new here, you'll see them posting in chat. I had people come and tell me this week, one of the things that people have been coming to me, multiple people have come and pointed out to me that Dell, the computer company, from April 2025 to here on the weekly, has set up and is so far holding its 50% level. A lot of things do that. One of my favorite stocks recently, Waste Management, great entry, 196, 50% level. By the way, this is the kind of stuff, there are stocks out there that act like cryptocurrency over the long run, straight up and to the right. You just don't see them on Twitter because they're boring. I mean, Waste Management, they carry garbage. I made a lot of money on garbage. Another one of my favorites that just prints money is Eli Lilly. It also did a 50% retracement to 640 back in summer of last year. Again and again, 50%. But I got that from looking at Ichimoku. Just stripping away all the extra lines and doing 50%. So that's where that line on Ichimoku comes from. Now, as highs move up or lows move down, and the time period, because it's based on 52 bars, moves, you will see movement in that part of the cloud. Now, the flat parts we can easily see. The movements kind of move at a different rate, but let's just kind of focus on a very fast move from flat to moving up or down, a cliff. Let's focus on cliffs. Let's mark off the cliffs, like where they really begin in earnest, begin and end. And what you'll find when you start to look at the beginnings and the ends of cliffs is that these will oftentimes, very, very often, very, very often, not 100% of the time, because remember, nothing is 100% in trading, but often enough that you can make a strategy out of it. Oftentimes, they will represent unique eras of price action. And the best rule for looking at these is when you have a cloud cliff or a hill that goes up, that is a timing element for something is going to happen. It may go up, it may go down, but you should always presume that something is going to happen. Of course, sometimes it might not, but most of the time it will. And so you can see going back just in the weekly here, back in March of 2025, you had the cloud on the weekly shifted up. And what that represented there was a bottom, and it followed with the cloud. I want to add one more thing to that, but we'll get back to that about why it actually worked that time. And then you had back in April of 2024, it marked what was the high then, and then you had something going against the going up the cloud. Okay, so that's why I said specifically that something will happen. I didn't say which way it's going to go. So that brought us down, and of course this went up. And then now in December, when you have the cloud going up, what do you have happening? You have it going up with the cloud. And so you can also see, going back in time, you have a moment here. You can also say that there was a little flat part right there. You want to kind of parse that out back in the last bull cycle where cloud was going up. This was where it made it move down. And then here where you have the cliff, it had been going up. That marked the top and it went down. So something happens. Something happens very often when you have a movement of the cloud, a cliff, something to that effect. And after a few weeks of such, you can, and if it's following the same direction like it is now, you could say that we have a phase in price action, a time in price action where we're going to have, it's going to follow the cloud up. And that's what you're seeing. And so I would then go to say that the first quarter of this year up to about, the late April of this year, we're going to see a trending bullish action. That's what I would presume based on the fact that when price got to that level, it had been in a trend down, and then now it goes up, so it should continue. Now, the thing I was going to come back to is that concept, where when it doesn't follow the price action, usually why it doesn't follow it up is because it was already going up. For instance, when we got to April of this year, 2024, or excuse me, last year, already in 2020, 2 years ago, well, time flies, April 2024, when the high was made, you had already been in a sustained trend. And so the change in the cloud direction was a thing can happen, except it went against the price action. So you always want to look at what it's doing. You want to look for a reversal in the price action. Now, this is the weekly. This applies on every time frame, more or less, but higher time frames typically more often. You can go back on the monthly of Bitcoin all the way back to December of 2022. It's even more clear. when that month, when you had a change in the cloud, that was the bottom. A little hard to see here, going back even further on the monthly, but that gave you a little push up there. And then when the cloud changed back to flat, a month later, that's where it topped out briefly. Of course, during the flat part, it went up, but we're only focused on the change in clouds. So do a little bit of homework on that yourself. See if you can identify that kind of pattern and see it. But I think that is extremely useful in contextualizing what's going on right now. So putting it all together, what is Bitcoin going to do, in my opinion? Again, I think for this month and maybe even the full first quarter, maybe even to April, we're going to see bullish action. Now, the first level I'm going to look at is, of course, that 50% level. But that's a lot of time, isn't it, that can come in here. So what I'm actually going to be looking for is for it to come up to here. It may not even take a position, but what it could set up in this time, again, going back to the person I like to follow, that uses chart patterns, the classical chart pattern of a head and shoulders. That might be what happens that fits in context with the timing based on Ichimoku. And then if we go to the monthly, there's a very, very clear timing element where something can happen in November of this year, November 2026. And so if that follows and we do hold that resistance, it could go down to November, and then that could mark the end of that bear cycle. Based on what I can see, that is the time and cadence of what I am looking for on Bitcoin. So if you have any questions, think I'm wrong, tell me. But that's the analysis. What's up, 1,000? All right. Well, if you don't want to talk about that, don't have any questions, we'll talk about some other things. We got to talk about the rest of crypto. So, and then we'll get to your symbol. We're about halfway through, so get your symbols to look at here in a second. So the next thing got to talk about is Litecoin, because I have staked my reputation, not really, but kind of. I made it public that my next position after Monero, which actually let's talk about Monero really quick first, because of course I would do a bull stream as a sort of unironic call because it was most bullish. Wednesday is when I did my stream, and that was, of course, the point of elation. Now, am I taking profit? No. It's not because I'm like YOLO, this is going to 1,000, even though I think it probably eventually will. I mean, I recognize, and I think everyone needs to recognize that just like silver, just like everything else, this thing's character, this asset's character, which is a currency, but it's an asset, everything's an asset, everything's a ticker. This ticker's character is that it will do these volatile spikes, and volatility is a double-edged sword. And so at the same time that you have a huge run up, you're likely going to get a big move down. I fully recognize this fact, but understand that since I started trying hard as I could to get people to recognize the privacy use case, the adoption as internet money, taking over Bitcoin share on the dark web, as well as, today there was a bit of quote unquote reason why Monero sold off. I don't know if this is true or not, but it is in line with my thesis. A lot of people attributed the first big run up of last year back in April to a hack. Someone stole a bunch of Bitcoin and they immediately converted it into Monero, which created a supply shock. I had a friend, I talked about this in the Wednesday stream, that tried to buy Monero this week and he couldn't. The buy button was disabled. Probably because, and I asked him, like, what do you think that was? It didn't explain it. I think now it's fine. But there was a lot of lack of liquidity on exchanges that was causing this. There's a lot of lack of liquidity in general with Monero because it's delisted so many places. And originally people thought delisting was going to destroy it. It's actually turned out to be a feature. But I don't know if this is true. I don't know, but this is the reason people say. Who knows? Who knows? But the thesis remains that Monero is the privacy coin. People use it. The adoption is linear and continuing, and it's proven itself resilient against the threats of attack, delistings. It doesn't have paid shills. It doesn't have corporate Ponzi's, and yet it has done amazing. Amazing. And I don't see any reason for that to continue. Now, is it going to sustain these levels? I'm comfortable saying probably not in terms of probability. But I entered and started talking about this in this region before the Binance delisting under the thesis that it was going to be a useful store of value. I actually don't like this. Yes, it's up. I mean, everyone wants to win as a trader, but I don't like this because it's going to suffer from the same problem as Bitcoin, where when the number goes up, no one wants to spend it, no one wants to use it because they think that their money is going to be worth more later. They can buy more with it tomorrow if they hodl. That defeats the whole purpose of money. One of the things I fundamentally reject is this idea that deflationary currency is good. Yes, it's better than money that is inflationary. It's better than money that in that way, but it's not good to run an economy at all because nobody uses it. Nobody spends it. The economy will seize up. It doesn't work. This is obvious. I don't know why this is not obvious to people, but it's pretty obvious that no one's, why buy a cheeseburger today when you can buy 2 cheeseburgers tomorrow? These are the decisions that people will make in a Bitcoin standard, and all the hamburger stores will close. So I was content with a 10 to 20% appreciation year over year because I'm not trying to get a YOLO out of it. But here I end up with a YOLO. We'll wait. We'll wait and see. We'll wait and see. But the question then for me, what is the next good risk reward? I mean, this is kind of, I mean, if you're not in already, it's just really dangerous too. I'm looking for it to do some kind of a pullback, obviously as it's doing now, but I found Monero to be extremely difficult to trade, to find setups on. It just doesn't behave like other assets do. But 515, we'll look at. We'll see if it comes back to 515. The next thing I'm looking at is Litecoin. I published 2-3 articles on Twitter and TradingView, or I've updated my TradingView on my thesis about Litecoin. I'll resume it here. Essentially, what you have, what really draws my attention to it, you guys remember looking at, was it the chart of Monero? 1, 2, yeet. Or, if you prefer, silver, 1, 2, yeet. We'll look at silver if you guys want to in a second. But it comes after long periods of boring, static price action, which is where Litecoin is. Now, the gift, a lot of people hate it if you were long, or if you were long on leverage, or if you believe in a conspiracy that all these TradFi institutions are out to get you and trick you into selling your Bitcoin so that they can buy it because they want your Bitcoin. Don't be fooled. They want this sound money more than you, and they're trying to trick you with their spikes. No, it's just Trump tweeted, market was illiquid on Friday, and frankly, interest has kind of waned. Also, you had that whole fight between Core and Knots. Wasn't really good for your image and killed a lot of the sentiment there at the 126K all-time high. You also had a false breakout right at that level. You just couldn't actually sustain, and that actually happened before Trump did his tweet. So no, your conspiracy theories are not true, but keep telling them anyway if it makes you feel better. Litecoin also had a spike on October 10th, which took it down to a low, depending on the exchange, of let's call it 56.20. Okay. Now, what's really good about this spike, which gives confidence that it's okay, is that it didn't actually take out the lows of prior years, because this is a very long period of malaise. Okay. What the best thing about this is that it defines where price should not go, thus you would need to get out if you were holding it. That's the key. We don't know what's going to happen. We can only size our stops and our risk and take profit. That's the only two things we can control. But given that we can see that spike, it's low. Below that, below 56.20, you don't need to be in it. Case in point, Bitcoin. Go back to Big Daddy Bitcoin. When it did its spike on October, a lot of people thought, oh, this will be fine. Hashtag this is fine. And but it defines where price should not go. Because these kind of spikes, they flush out all that excess leverage. They shake out the weak hands. And so those people aren't there anymore. And now price can move a little bit more organically, you can say. And so when and if you break that low and spike it out, you need to be out of it. That's just what you need to do. Okay, hashtag this is not financial advice. You don't have to. If you're in a trade and you have a break of your stop, which is defined by a major liquidation event, a major fundamental event, if it breaks it, hell, if it even comes back to retest it, it's a little dangerous. It can, but you don't want it to ever break it, because that means it's real. That means the market is deciding that it doesn't want this thing. Now, of course, after you had a nice little leg up. By the way, that leg up was a hit of the 50%. But if you had followed your rules and gotten out at that point, it would have been the right thing to do, because the bearish move, was in fact real. Not the only time that's happened. I remember very distinctly, I remember the spike of December 3rd, or is it 4th? December 4th, which is Saturday. But December 3rd was the U.S. jobs report. Now, let me refresh you, back in ancient times, the ancient times of 2021, interest rates were still at zero. But the Fed was looking to start raising, and one of its key defining reasons it cited was going to be looking at employment numbers. And so when the employment numbers on the 3rd of December came out that were good, it signaled that the Fed was going to raise rates. When Bitcoin responded, it was responding to the idea that the zero interest rate environment, which had fueled its fun times since COVID, was coming to an end. Then I tried to raise the alarm to people, but anybody saying anything about Bitcoin possibly going down, they're just going to ignore. But that, even though it sustained it, eventually it did break that level. And so if you were wise, having broken that spike, that liquidation event, you would have gotten out, and that would have saved you a lot of pain and kept you out at about 40K from the bear cycle that went on to go down into the teens. So the key thing is, when you have these big, significant liquidation events, you know where you need to get out. It defines it for you. It gives you a little insight that you don't have to wonder or question. You can just make that your plan. So going back to Litecoin, the fact that the spike itself did not trigger the lows of the past, the fact that the spike exists defines our risk if we want it to go long. And I do want to go long, because something being this boring, this slow after so long, price just abhors a consolidation. It likes to break out hard. The longer it consolidates, the bigger the breakout typically. And so I know where my risk needs to be. Now, I've been a little impatient, but today, or yesterday rather, again, using volume profile, the Big Daddy volume profile level for the last 8 years, well, yeah, about 8 years going back to 2017. If we do it on the histogram right here, in other words, if we draw our volume profile, we ask, where has most of the trading happened? Where has most of the price action happened over these last 8 years? That answer is 70-44. Now, I started this thesis earlier this week, and this week it actually hit it. It hit it, and oh, I just noticed this here. I was gone doing some other things today, but today was a spike. No, it's not quite the spike trade. By the way, this indicator, it just helps me see these false breakouts or these spikes of price. It's when price comes down, breaks prior lows in this case, and then comes back up to close intra-bar within the range and within the Tinkinson of the part of Ichimoku I drew out. I just noticed that during the stream. That's good, but more importantly, remember that volume profile that I showed you there. Again, this is on the lower time frame. This is a long-term thing. This could take a year or like Monero 2 or 3 years to come out. But this 744, based on the volume profile last 8 years, based on the fundamental meme of privacy coins popping off, Monero, Zcash, Ztrash. By the way, Zcash, the most obvious paid shill pump. Yeah, the most obvious because it was the most widespread in my career I've seen. I'm content saying that. So obvious that it's just failing because I mean it's destined to fail. It's absolutely astroturfed. Don't care about it. But Monero is the default privacy, but it's not listed as much on exchanges. Litecoin is ubiquitously listed across every exchange. Been around forever. And it has optional privacy features. So if you really want to make a private transaction, you can, and it's going to be a lot more accepted by people. And plus, you can actually have those speculative inflows coming from exchanges. So arguably better for speculation than Monero, but all the properties that I'm looking for in terms of the privacy use case in cryptocurrency are present. And plus you have this price action that is just building up energy to potentially go. Again, we'll see. Anything can happen, up or down. But if it goes down, I know where I need to get out. And then all I have to do is just wait for upside. And so coming into this year, that is the best risk reward trade in crypto. So we'll see. We will see. Any questions about it? Let me catch up with chat if you guys have any points to bring up. So you think I'm right on Bitcoin? Could you check ZRO? It's fine to be bullish on it based on fundamentals despite the price action. Yeah, let's look at your symbols here. I hold up on the symbols. I got one more thing I want to talk about, which I think is actually really interesting. I'm not quite ready to talk about it. Let me just tell you where my brain's at right now. Let me find it on Discord. By the way, guys, if you like this, make sure that you like to subscribe and hop on Discord where a lot of my thought process happens in real time before it actually gets put on the chart. But I always feel before I shill, but that's the first place I talk about is on my Discord. So this is interesting to me, and I need to spend some time because in school I was pretty good in school, but I was definitely like a B, C math student. I had to take calculus 3 times to get through it. So trying to understand like the multiple formulas and equations of probability is hard. Okay, but I want to know it. I want to use ChatGPT, excuse me, to explain it to me. That's what I should say. But here's the prospect. So right now, let's just look on Polymarket. Aha. So there's really only one Monero thing. And so there's a 61% chance implied by the market that Monero will hit $1,000 this year. So better than 1-to-1. But there's money here because you have to put up money for this yes or no Boolean binary option to happen. Okay. Because it's a yes, no. I mean, there's no reason to have a stop because it'll either happen and you'll make money or it won't happen and you'll lose money. And so that presents an interesting fix on the probability you can punch into a trade. Is one side of a hedged trade of probability. And I need to play around with this a little bit more because the post explains this a little bit, where essentially you would do two things. You would take a polymarket bet, no, it will not hit it, which is betting on it'll stay the same or go down. And then you go out and you buy Monero, because if it doesn't hit 1,000 and you bought the Monero, it could stay the same price and you would not lose money on the Monero side, but you would lose it. But okay, let me back up. See, I had to really think about this. I need to research this myself. You take a no bet, no, it will not reach 1,000, and then you buy the Monero. Okay. Monero goes up into 1,000. Now you'd want to take profit there to make the trade, fixed, but you would make money on it going up, even though you lose on your bet no. But you make money overall because you can fix and size either one of the positions, and that's where the math comes in. Or it doesn't reach 1,000, and you've got your Monero, but now you win on your no bet, which is actually on the higher side. So you make more if it doesn't reach 1,000 because the probability is 61%. That implies that you've got about, like, let's say if you put down $10 or $100, let's say, you should get a payout of $39, 37 because they take a 2% cut. So you get $39 if it doesn't work out. No, 39 if sorry, bear with me. Math is hard. There's a 61% implied. So the no bet will pay you $61. Let's keep it simple. And the yes will pay you $39. That's right. So you make more money betting on no than you do on yes, because essentially more people are betting on yes, 62%. Actually, it looks like it was better today. It was at 70% overnight. Let's see, what's the, and of course, this is absolutely because you have people arbitraging. Oh, they just started this. That's why people are talking about it. Okay. There, that's a week. Okay. Yeah. So this only started January the 14th. It only started this week. So you can bet that there's arbitrage going on with this trade that's going to keep this in line like an option market, basically. It is an option, essentially. It's a binary option. And there's math to be applied that can set up a very interesting risk-reward trade here. And so I find this interesting. Am I going to do it? I don't think so. Mainly because I think Americans still can't trade on Polymarket, or rather, I know it's technically against the law to bet on political outcomes. I think you can use a VPN. I'm not sure. I don't actually have a Polymarket account, but I've become more and more interested in betting markets, because whether it's this one or it's something else, betting markets are going to present opportunities to hedge spot ticker trades, like I just described, where you can buy an asset, you can buy long or short something, and then come on Polymarket and find a bet that will be able to cap your risk, essentially. In other words, you bet on something going up by buying the thing, and you take a bet on it going down, yes or no, and that can offset your potential risk. Or there might be a situation where you can win on both. That I find very interesting. I need to dig into a little bit more, because I said last Friday, coming into this year, I'm very reticent to buy stocks, because of the probability around the broad market being overvalued. Because I'm not saying the market is going to crash. I just don't think, I think that the risk reward in trying to go long for the long term is very distorted by the valuation of things right now. Um, I'm being very hesitant. I haven't taken any stock positions this year yet. People brought that Dell opportunity to me. I haven't quite capitalized on it yet, but I think it's still it's a good setup. It's definitely a good setup. But okay, just to kind of recap, maybe I'm going to dig into that this week. The poly market hedging. If it's something I think I'll use, I'll definitely become as professional as I can at it. But that is a very interesting thing that has opened up in the market, and I'm always looking for whatever is new because you got to do that. You got to be diligent. You got to stay on top of things. But one thing I want you guys to pay attention to with Bitcoin and Litecoin. Now, right now, Monero is in a very volatile state, but time after time, day after day, I would see Bitcoin and Monero on my watch list. And then you would have a down day of Bitcoin and Monero would be up. There's a constant divergence in the two of them that I was constantly pointing out to people. I was seeing it on a very regular basis. Granted, I'm looking for it, so it's kind of like Schrodinger's correlation. You know, if it's observed, you see it maybe. But be watching now. Put Litecoin on your watch list and start to watch how the crypto market treats things. Like if we look today, it's a little bit of a mixed bag. And there was a big sell-off there on Zcash. Of course, it came down to a support, a beautiful, beautiful support, and then set up a nice spike trade there. So this is ideally what you want to see in a spike trade. People get flushed out, and then you have a big stop run or people FOMOing in. This is just a lower time frame. I'm talking about a long-term thesis here, but this is an excellent teachable moment about what a spike trade you want to see. You want to see this be a sign of reversal when you have one of these big long wicks. That's what you want to see. Flushing out all that excess and then up. Beautiful, beautiful, beautiful. That's exactly what I want to see when I do a spike trade. I want it to fly from my entry, don't you? Okay. Let's look at symbols. Let's close things out. All right. Let's go back up to live stream on Discord questions. Okay. Got IWM breakout. I have actually noticed that. Or I've noticed people talking about it. So IWM is the Russell index, and that's the more of the I would say it's the mid caps. It's the smaller than big cap stocks, or it's more inclusive. We'll put it that way. It's not the small caps. It's 2,000 stocks instead of 500, but it has more in there. And of course, I'm not sure the weighting of. I'm actually curious about that. Hang on. What is the weighting of the IWM by sector? Give to me in percentages. So I know that in the S&P 500, the tech weighting is 35%. This is interesting. This is a much better breakdown. Okay, now put that into a table, and in the second column, give me the relative percent of the S&P 500. See if it'll break that down to us. Big thing is tech. So the S&P 500, the ES futures, or the SPY, as we're comparing it to the IWM, tech is 30%, which is double what is in the Russell. And I find it interesting that healthcare is actually one of the highest in the Russell. That's interesting. Healthcare, by the way, is my most bullish pick for the next decade. The thesis there, fundamental thesis, is boomers have a lot of money and they don't want to die. So massive wealth transfer is going to go into keeping people alive from the wealthiest demographic. Healthcare. So that's where I have focused as much attention as I can. I am not very focused on tech right now, especially right now where there's a lot of topping out signals coming from the big players. And as just with Litecoin, I like to buy things when they're boring and low. I do. That's just I can't buy things that are going up. Consumer everything else looks kind of comparable, although S&P definitely underweights a lot of stuff. Essentially, Russell is a lot more diversified. It's a lot more broad. Things like real estate. Real estate's a lot of capital. A lot of capital is in real estate, and it's only 2.5% of the S&P 500, whereas in the Russell, it's 6.7%. Materials also, energy, even that's weighted a little better in the Russell. And yeah, but one of the things that people kind of imply when they begin to see the Russell outperforming the broader ES, the SPY, the S&P 500, is let's do that the other way for how I'm saying it. IWM divided by SPY is, and there's been a breakout essentially of the prior downtrend. In other words, tech has really outperformed since 2023 on, but you're now starting to see a change in the trend. What if we add Ichimoku to that? Does it give us a bull trend? Well, definitely. What about the weekly? Almost. And you can see it's very this has been the weekly Ichimoku of this cross pair comparing this Russell to the SPY is going to give us a very, 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 very good. You can't replay it. Okay. So back in January 2022 is where you started to have that trend begin to go down. Very interesting way to look at this, I think. And so far, the trend has definitely been contained by the cloud. And now it's been some times before where it tried to get on the other side of the cloud, but you never had momentum going to match it. But we're not far away. And so I'm going to take note of this. You guys should too. IWM divided by SPY. I think I'll make a trading view post about this because this is interesting. I have seen talk about this in other forms. I think there's I think EEM, which is like emerging markets, is also maybe doing. I think Peter Brandt, one of the only real trader I follow that posts regularly. I mean, if some other goats post, I'll look at it, but he posts pretty regularly. He was talking about this the other day, or actually, he was kind of dropping some breadcrumbs to his followers, which I like. About, hey guys, what is this chart? And didn't say what it was, and let people figure it out. And what it was, I believe, he was doing emerging markets in SPY, which again on the weekly is also doing the same thing. Now, I think if I remember my correlations and causations of markets, I want to have ChatGPT remind me. I think it means that you're having a broadly expanding economy, which is actually very bullish. Broadly, the Russell starting to outperform the S&P 500 in general terms of market sentiment and commonly accepted wisdom. It is a commonly accepted interpretation as a shift towards risk-on, pro-growth market sentiment, and it implies higher risk appetite, improving domestic expectations, broadening market participation. TLDR, that's bullish. Everybody telling me that we're careening towards a recession, careening towards a crash, just like they do every day of every year of my entire 12 years doing this professionally. Every day, market going to crash. We're all going to be poor. Watch out. Fear, 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 fear. You just get immune to it after a while. It it gets clicks, it gets likes, it gets shares, it's not real. It's not, and it rarely does it happen. That's just probably everything is going to be okay, and I mean that literally. The probability is that things are going to be fine because it is. Yes, we will have a horrible, terrible crash, depression, bear market at some point. We will, but it's never going to come from where people think it is. Never does. That's what makes it so bad because people aren't prepared against it. That's why back in 2021, when everyone was worried about the United States turning into Zimbabwe with hyperinflation, I was like, nah, everybody's aware of it. It's not going to happen. Now, people argue that we're still, no, we're not. Inflation got under control. People are going to be mad about this, but we actually had a soft landing. Granted, it's a bit of a K-shaped recovery. Wealthy people did well. Not as wealthy people that didn't own assets have not done as well because wages haven't kept up with it. I'm aware of all these things. I'm aware not everyone's happy, but we didn't have the 2008 level bear market, which is 3 years of declining growth and equity prices. So we turned out okay, despite what people were afraid of. And now they're on to some other new fear: tariffs, war. There's nothing really going on right now bad in the scope of things. And if you just kind of sit back and don't consume the news and you look at things that have worked before, the signal is actually bullish. Thank you, Huna. That's a good catch. I've seen talk about that too. And I need to do a write-up on that this week, actually. All right, what else? Oh, MicroStrategy. I haven't looked at MicroStrategy. I actually took it off my watch list last week because I frankly don't want to care. What did they do this week? I think broadly that it was a train wreck in progress. Well, they haven't turned it around yet. But broadly speaking, in case you haven't seen my sentiment on MicroStrategy, I'll show you something that once I saw it, I can't unsee it. Let's see. It's following the classic trajectory of a bubble. Come on now. Oh, that's in black. So, oops, gross. But you get the picture. You have your run up, your first sell off, the bear trap, the new paradigm, which was infinite money glitch. You have the bull trap, you have the return to normal, and then you have capitulation. And is this despair? Is this return to the meme? I don't know, but we'll see. I had a short. I was very open about it. It hurt me very much during the summer. I had to just not look at that account because all the puts were in the red. And then I closed it much earlier by the end of the year, closed it at 200 because I'm always early on stuff, and took profits, and I'm done. And now I'm just watching the cope. So MicroStrategy needs 350 for average. It's not even moving with Bitcoin now. Bitcoin goes up, but MicroStrategy is not. You're telling me stuff that should be a warning for people, but I think a lot of people have just look. If you guys ask me, I'll talk about it, but I'm not speaking to you, Unreal. But in general, let me just do a public service. Don't put your financial future in the hands of one man. What would happen if Michael Saylor were to, God forbid, shuffle off this mortal coil somehow, or even get sick, have a little heart attack, something like that? I'm not wishing this. I wish everyone, I don't have any, I don't like him, but I don't want anything bad happening. But what if it did? What would that do to the price of MicroStrategy? What would that do to the whole thing? What would that do to the price of Bitcoin? It would affect it. And so y'all, talking to the Bitcoin maxis here that are irresponsibly long MicroStrategy, have put your financial well-being, which we do with everything, basically. We put it in the hands of the CEOs of companies, but the level of veracity and dedication to MicroStrategy is just unparalleled. And you put all that in the faith of one man. He's become the Bitcoin Jesus. What happens to him? What happens if he has a horrible podcast where he is absolutely obtuse and hostile to the interviewer, like he was, about a week ago, and he comes off looking really bad? Like, what happens when his image is tarnished? You've already wrested Bitcoin, this supposedly decentralized, doesn't need a governor, doesn't need a company to run it. You've centralized it into one person. What are you doing? Stupid. Faustian bargain. Deal with the devil. And I'm just watching it unwind. It's not getting good. You're getting data points. It's not moving with Bitcoin. Okay, yeah, exactly. Because it's a leveraged Bitcoin bet. It's not Bitcoin. It's a leveraged scheme. I won't use the P word, but it is a strategy, which is, in the thesaurus, you could say, is synonymous with scheme. Yeah. I'm not going to spend more time on that. It's dumb. It's bad. Not good for Bitcoin. I think it's more and more likely that it's going to be the catalyst for this bear cycle. It's going to define this bear cycle. And when MicroStrategy goes to zero, when it goes bust, then we can resume Bitcoin and see what the next phase will bring. That's what I think. All right. Zero. Is that or let me go backwards. AMN, and you were looking on this, Jeremiah, AMN Healthcare. Yeah, look at that. So did you stay in? Sorry, I'm just not getting to that. You got out. No. Whoa. Okay. Wait. So we talked about this. I've got this drawn on the chart here because I believe this was a breakout. And I don't take breakouts for this reason, because you have to give it so much freaking risk. But we put a stop below the low of the August earnings, and we marked it off last week, and it looks like they had something happen, and now you come back up. I mean, I wish I'd been bold enough to go into this, but this is actually looking okay, because you come back above the cloud now. Actually, you had a hold. Let's just take off the old trade. So from here to here, 1903 or 1885 is the 50%. Watch it. This is I mean, it's healthcare, so don't threaten me with a good time because of my 10-year thesis. But yeah, I mean, if you got out at break even because you were tired of it, okay, but it's looking better now. I'm starting to like it. So, all right, CBRL. Cracker Barrel. Oh yeah, that's kind of a meme. Well, excuse me, sorry. Hey, did I miss this? Did I mark this off and not? I don't think I bought it because I don't think I was wanting really kind of. You know what? I just need to stop thinking. I might have said this in the last live stream though. I'm going to start retard maxing this year. That's essentially not thinking so much and just doing. just be a retard. Like, don't overthink things. Like, IQ can sometimes be a double-edged sword. Smart people make bad decisions all the time. Just don't think. Just have an edge, have a strategy, just do it, and then don't worry about it and have a much better quality of life. But yeah, this would be an example of just retard maxing because I'd already drawn up from past live streams this again the granddaddy volume profile going back many, many years, all the way back to 1992. This level that needs to hold is 20. You know what? I got into. Do I want to buy Cracker Barrel? Hold on. I don't know if I. You know what? Maybe we do just for. I need to set up a live stream account where because people come with ideas like this. This would be a good candidate because this is something that live stream watchers have brought to me, and it's because I teach these things. And what if we just do it? What if we just do it and watch this work? Because I'm confident it would. We would get plenty. We get winners because we're using things that I use. It's just I've gotten in my way of just not being like, whatever. You guys pick it. I'll put my money on it, and we'll see what happens, kind of deal. So this would be a great candidate for that because it's fitting everything I said. The reason I'm really attached to these is because of Dollar General. That's been a big win from last year. That was, of course, another Big Daddy volume profile, POC, from many years ago that it held, and reversed from a major, major downtrend. And what better way? These are the kind of things that I want to buy when people think they're dead. So this is a me trade here that I'm not in yet. But thanks for bringing this back to my attention. Um, it's fine. All I have to do now is add this to my watch list and look for potential 30-minute spikes, long spikes, or a pullback to 3087, which, oh man, it was already doing some spikes down here, actually. That one didn't work out, but this one did. On December 31st. I was not looking at it. I was not checking the alerts on 31st. That's another little key point. Holidays of markets oftentimes have awesome setups because nobody's looking, including you. All right. What's the last thing we gotta look at? ZRO. Is that Biocenta or is it Zero USDT? I'm gonna say that probably USDT because in the context of this. Okay, so it's fine to be bullish on it based on fundamentals despite the price action. Well, if you're talking about the crypto, it also, like every crypto, has that spike, but I don't touch these things. I talked on the Wednesday live stream about a crypto portfolio, and the only things that I would consider putting into it right now would be Bitcoin, Ethereum, Monero, and Litecoin. Litecoin being the most recent addition because of the position that I'm taking. Bitcoin because it's Bitcoin, kind of a tautology, but all these have, well, the main three, Bitcoin, Ethereum, and Monero, have something in common where I don't think they're going to go to zero. So it's about capital preservation in the context of portfolio formation. I actually say Monero has a chance because of 51% of tax, but as the price goes up, mining increases. It's getting away from that, fortunately. The Bitcoin's not going to, it's going to be around. Trust me. The Bitcoin followers, the Bitcoin maxis, they're like juggalos. I've said this before. Juggalos are the followers of Insane Clown Posse. Look them up if you dare. Essentially, a dedicated fan base that is immune from outside criticism that is never going away. And that is what Bitcoin maxis are. And they're never going to sell their coins, and they're always going to be there. And so there's always going to be a price floor somewhere. Network is secure, and it's not going to get hacked. So it may have or more from the current price right now, but it's not going to go to zero. And that's important. Ethereum, because it also has a lot of institutional support and a lot of the cool stuff that happens in DeFi with smart contracts and decentralized exchanges all go through Ethereum. So that would be my pick. I actually don't have a position in it right now, but I got my eye on it. But if I was building a crypto portfolio, this would be it. And all the other stuff that hasn't been around for 10 years or close to 10 years. How long has Ethereum been around? Let's just give it a horizon of, if it hasn't been around before 2018, it's going to be very hard for me to buy that thing from you. It just is. I want the bluest of blue cap cryptos. And yeah, that's what I'm looking at. All right. Oh, let's look at it. Interesting enough, Hoist. I did talk about Litecoin a lot. So go back because I went over my whole thesis. TLDR 7044. Litecoin 7044. That's the entry point. That is the entry point from this week. Coin. I hate Coinbase. I think besides from MicroStrategy Sailor, they are the company that has done the most to harm crypto. I will never buy Coinbase, but I will say I will analyze it for you. I'm not going to be able to give you an analysis because I hate the company. I do hate them. I hate them because 10 years ago they were at the forefront of turning over records to the IRS and the government. They have been all about mainstream adoption and compliance with regulation. And that goes against the ethos of what I think crypto should be. I think it should exist outside of the established system. But you know what? I didn't get to choose. They didn't listen to me, but they did listen to Coinbase. And now, this week, when there was a proposal of the Senate Banking Committee's suggestions to create a crypto bill, Brian Armstrong of Coinbase comes out and he says that he doesn't like it. The problem when you hand things over to government and you say, government, please regulate me. Please make me safe. Oh, they will. And they will tax you for it. And then very often, like in the case of the SEC, fail to actually make you safe. They'll come in after you've been robbed and file some charges if they catch the people, and then maybe tack on some legislation for the last exploit. But they don't really do anything to prevent it. They just kind of come in and create the laws that let you, charge and put people in prison for. But they don't make it any safer on the front end for you. They just make it more restrictive, as the bill is. And so to Mr. Brian Armstrong, who's been at the forefront of inviting that which he now doesn't like into crypto, you got what you asked for. Anyway, no. Coinbase, not even once. Sorry, I can't give you a very better analysis than that. Chipotle. I actually have an entry here from a live stream that I put in from the big granddaddy level. I think, but I'm not in this. It's not on my record, so perhaps I've missed this from November. I think I kind of got a little lazy there at the end of the year. But maybe it was something else you were looking at, maybe a voice or somebody else on the live stream. Whenever I bring up something here in the live stream and somebody asks me about it, and I have lines already, typically it comes from the live stream if I'm not in it myself and I haven't done the analysis. But let's back up. Let's again show how awesome volume profile can be. So that is the volume profile for that whole past price era right there. What is this level? Let me see if I can get it perfect. Wow. That is almost inexcusable. That, again, like I said, if I just start throwing money at these long-term volume profiles, damn, that is a miss. I'm not in this, but someone in chat obviously brought this up, and it even gave you an opportunity for a Tinker's and crossover. And again, when you have that first initial push up off the level, to buy it off of the 50%, the local 50%. Wow. So late November, I should have been getting into this. I am very remiss that I didn't. I need to set up that account. And whenever people bring something on live stream that fits the rules, I just buy it. And then I can blame someone else if it doesn't work out. My money, but it won't be my ego because you guys brought it to me. Beautiful hit and hold at the volume profile level. Are you in it? I'd use the same logic looking at volume profile there. So it looks like it's going to come up to a resistance from the past there. And that's going to be very close. The thing is, you want to be in here, and then that way you don't have to worry about resistances because you bought at 29 and you doubled your money, and you can just sit there and wait. Now if you were to get in, you have to worry about these resistances above you where it can turn on you. Best to get in at buy low. That I should have taken. I don't know where I drew those levels. I may have just drawn those levels in hindsight, but if I was diligent, I would basically at some point sit down instead of playing video games in my free time, go through every damn stock and draw these volume profile levels, even if it takes half a decade for them to get to them, set an alert so that I know when these big granddaddy volume profiles from years in the past hit. But that is a beautiful hit and hold, just like we were looking at in Dollar General, or what did we look at earlier? That was the medical one. I think it was the AMN. Okay. Stay through it. Oh, no, sorry. All right, United Healthcare. I am long United Healthcare, which is also. See, I'm mad at myself, but I get most of them. This is also a hit and hold of a big granddaddy volume profile level at 245.40. Now, this was a bit dicey when I got into it, along with some friends that I trade with. But it's healthcare. It's a multi-billion-dollar company that was down. What was this? From the highs, 60%. Yikes! And so we got in around the 245 level. Just shares, not options. I just want shares nowadays. And then it comes out a few weeks later that Warren Buffett had picked it up, as well as Michael Burry, but mostly Warren Buffett, who's constantly looking for value plays because, it's a huge company. They're not going out of business. A little bit of a reaction to bad news. I'm in it. I'm holding. So, and it's kind of stopped moving, but I don't care because I'm in from 245. So I'm bullish. Holding it. AMD. I think I'm bullish on this. I'm not in it, but yeah, it's fine. You're bullish. I think I used this as an example last week when I was talking about the cloud movement. We can also use it in this case because you got a big cloud movement here, but so far you're not coming down to it. But I think what I'm going to see is basically a little bit of lagging down to here. And then around March of this year, look for it to potentially have some upward movement here, at least even if it's short term. But definitely bullish on that. Definitely bullish. I think what I was looking at here in this past annotation is, I think I looked at it probably last week. Maybe you brought it up last week, but I was looking for it to come down to this 171 to 160 area, where that's going to be a 50% and volume profile level. So that's where I would want to pick it up. And if it happened right at that cliff of the cloud, of the Ichimoku cloud, that would be a perfect timing element for that to happen. So I want to come down earlier, but if you're in it, it's bullish. So you're good. VFC, last one, unless you got one more for me, guys. VFC, VF Corporation. This is what I've been looking at. Is this also? It may be. Again, you're giving me stuff that gets me excited because I love stuff that is dead. Do I have it? Let me just redraw. I think is this a metals a materials corporation or something? It is fighting its big support as well. A little messy, but if I saw a setup in this, the daily's already starting to trend up. It's hit the 50% of this I know that because of the flat of the Ichimoku. And so you really need this on the weekly to break, but you can if you can get momentum out too. So you're at the cusp of breaking out off of a major volume profile level. This is good. This is good. If you see a setup you like, and that's what I want people to do. Look for price to get at these support resistance levels, and then use whatever techniques that you like to give you risk defined setups. And that's the recipe. That's the recipe I want people to apply. I don't want to tell you what indicators to use. I keep things simple, but look for setups at these levels. That's where the money is. That's where the money is. All right, guys. I may be open to encouragement to have a Wednesday live stream last week because I enjoyed it. So let's just go ahead and pencil Wednesday, 4 p.m. for the next one. Friday as usual. And I want you all to have a great weekend. And remember to trade wisely. Thanks for hanging out.